Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia, and this evening once again I'm joined by my brother and partner at As Good as Gold Australia.
Good evening, Darryl.
And this evening we interview Alasdair Macleod, advisor to As Good as Gold Australia. Good evening, Alasdair.
Good evening, Darryl, and good evening, Brian.
Alasdair, as much as I am a great fan of yours, I'm also a great fan of a gentleman by the name of Greg Mannarino, and he wrote an article recently, and I'd really like to share it with you, or a part of this, and ask for some feedback from you. He's titled this message, "Look at what central banks are going to unleash," and that really took my attention. And so he goes on to say this. He says, "Let's start off with this. Today, more than at any other time in history, nothing is what it appears to be. Lies, distractions, and every other conceivable manner of deceptive tactic is being weaponized and applied to keep an unknowing public in complete darkness as to what is happening to them." Pretty severe.
Yeah.
The system, their system, has been twisted into an in-our-face nightmare state for the middle class. A psyop, an extreme counterintelligence, sabotage, deconstruction, propaganda scheme of unprecedented scale. A key component of their system, of which we are forced to participate, legally removes wealth, ownership, liberty and freedoms from the masses and pushes it right up to the elite class. Does that sound a bit harsh? It's time to wake up, as a new phase is about to begin. Now, that's pretty severe, and I'd just like to get your feedback on what you think that Greg is really leading to. Are we entering a new phase that we should be very much aware of? Are things going to become far more severe within the banking sector and a government's having greater control? What is he really leading to here?
Well, actually, what he's saying is really quite timely in the context of Jay Powell's speech at Jackson Hole. In that speech, what he did was he signaled very, very clearly that the Fed's priorities were shifting from controlling inflation, which Jay Powell said is now sort of under control, to trying to manage the economy. And the reason for this is that there are signs that the US economy is no longer growing. It could be slipping into recession. And the easiest way in which the Fed thinks it can manage that is by reducing interest rates. And in any event, the markets, I mean, you talk to anyone in the markets, anyone managing money, they've all been saying, you've got to reduce interest rates. You've got to reduce interest rates. And so Powell has come under huge pressure from wider establishment to do just that. Now, I think in terms of sort of conspiracy, I'm not quite with Greg on that, because I think I'd rather put it this way, and that is that over many decades, really since FDR with his New Deal and all the rest of it started intervening in the US economy, and Hoover before him. Bear in mind that no president before Hoover actually intervened in the economy. Everybody knew, all politicians knew, leave well alone, it'll sort itself out. Which is why the recession in 1920 to 21, the post-war recession in America, was short, sharp, and very, very brief. I mean, within something like a year to 15 months, it was over. Bang, just like that. Contrast that with every other recession, and they just grind on and on and on and on, and eventually they print enough money to give the appearance, if you like, that the recession has disappeared. So they basically got themselves, I think, by themselves, I mean the establishment in the form of central banks and all the rest of it, they've got themselves into this hole over a long period of time. and they're trying to wriggle their way out of it without actually understanding classical economics, if you like, which would inform them, look, hands off, just let the economy sort itself out. That has all changed. That's where the whole thing went wrong. And I think we are rapidly approaching an endpoint. So Powell is the man who has now got the responsibility in his shoulders for dealing with a failed policy. And it's going to take, I think Greg's absolutely right in the sense that, we're facing a new problem here because there is no way that the inflation problem is over. If you understand the origin of inflation, in other words, the loss of purchasing power of a currency, it's basically a combination of government deficits and consumer spending financed by borrowing. And if you put those things together, then you're going to inflate prices, which is actually, the same thing as saying the purchasing power of the currency goes down. That process is not over. I mean, I was looking at the savings rate. I've sent out a thing on my Substack this morning, which included a chart on the US savings rate. That's now negative. So that's very inflationary. On top of that, you've got a budget deficit running at well over $2 trillion. I mean, I think the outturn this year could well be over $2.5 trillion. And I'm talking about this year ends in September. We've only got another month or so. And after that, it's going to be even more. And if we are on the cusp, if you like, of a recession, then what do governments do? I mean, according to the macroeconomic and Keynesian playbook, what they do is basically increase the deficit to try and support the economy.
Yeah.
And so, we start with a debt to GDP at a record level higher than it was in the wake of World War II. Now, 130%. It's going to go up from there. So, this is a real problem. And I think where this will fail is the foreigners are now, going cool on US debt, on buying US dollars and US debt. And we saw this with the trade-weighted dollar beginning to fall quite sharply, actually, in recent days. So how are they going to fund it when they rely on foreigners to basically pay the government's bills? I mean, the answer is it's not going to happen without interest rates rising. So, I can see the dollar's trade-weighted falling by a good 10%. And on that basis, Powell then has another problem. He's not going to be able to fund the deficit. So where that leaves either Trump, who is a spendthrift, or Kamala Harris, who basically is a lawyer and doesn't understand any economics, as shown by her recent statement, where's that going to leave them? Greg's right. We are on the verge of an unholy mess. And I think it's actually the end of the fiat currency system. We're beginning to see the beginning of the end of the fiat currency system. That's roughly where we are.
It's interesting because, it's more than interesting, but I watched a very quick segment the other day with Donald Trump being interviewed. It only went for a minute and a half, 2 minutes. But the chap that was interviewing him said, look, Mr. Trump, if you win the election and you become the next president of the United States of America, are we just going to see more of the same? I mean, we've got debt levels spiraling out of control, inflation. What can you do about it? And he said, the one big difference between what we're seeing now and what I'm going to do is, he said, I'm going to make sure we have an enormous economic growth. He said, it's just going to be phenomenal. You know what Donald Trump's like. And I thought to myself, but this is common. This is a common response.
Where does the money come from?
But where is the money going to come from? They don't have too many tools in the toolbox. You can come in the form of taxation, direct and indirect taxation. And of course, cheap money. Just keep printing more of the stuff. But no one ever seems to ask these questions. So even Donald Trump isn't ever cornered where he's got to answer those questions. And I find it alarming that mainstream media don't make more reference to this and hone in on it, because they would have no positive answer. It's all right talking about increased growth, massive growth, but how is it going to be achieved? If there is another way, can you please explain it to me? But I don't think there is.
No, there isn't, Darryl. You're right. And his economic policies are completely balmy. He reckons that if he can stop Chinese imports into America, then he can rebuild the manufacturing base in America. Now, this, if you like, I'm sure that every businessman he meets says, you've got to make America great again. We want to repatriate our manufacturing. But, this overlooks one basic factor, and that is that the reason Americans buy Chinese goods is because they prefer them. I mean, there are various things that go into preference for goods. I mean, price is one thing. Things like reliability, quality, all these factors come together in the consumer's mind when he makes his choice, what he's going to buy. Now, for American business to start manufacturing to compete with China, this is obviously a very big ask. Donald Trump's answer to this is tariffs. We'll raise tariffs. And not only will that stop Chinese imports, but also it means that we will get income, which will allow us to cut taxes.
Right. Oh, yeah, sure.
But if he does that, basically, what happens is that he just drives up the prices because, prices coming in, motor cars are a very good example. The Chinese are way ahead of everybody else in terms of their production of motor cars. And, I think they're talking about 100% tariffs on imports. This is basically denying US consumers, valuable goods.
Yes.
The idea that this is a tax against the Chinese is actually flawed. It's a tax on the people. The whole situation is just complete nonsense. And this is a man who, is campaigning to become the next president.
Yeah.
And don't start me on Kamala Harris.
Well, there are no other options. I mean, that's it. That's probably what Greg Mannarino is talking about. I mean, they are the two options, and I really can't see the world moving forward with either of those two at the helm.
And the thing that I don't understand in this particular thing about tariffs is that after the Depression of the United States, they tried tariffs. It didn't work. So what?
It's worse than that.
So is it going to work now as it didn't work before?
Yeah, but it's worse than that, Brian, because the Smoot-Hawley Tariff Act was signed into law by President Hoover in, I think it was May 1930. And basically, when it was proposed, it was at that point that Wall Street started collapsing. And when it was eventually signed into signed into law by Hoover, it was at that point that the stock market really started going down, and it was unremitting. It just fell and fell and fell between May, June 1930 and the middle of 1932. And banks were going bust and all the rest of it. I mean, this idea that tariffs, can rescue you from whatever is a load of nonsense. If you go way back, then tariffs were a source of income for governments. I mean, that's, you probably read all the novels about Cornish smugglers and all the rest of it. Well, that was because there were tariffs. And certainly it meant that, government spending, if you like, was contained by that source of income. But we're talking about pre-income tax days. I mean, this was a situation before Pitt the Younger introduced income tax. So, but that's not the situation now. We have huge, great taxes, and to put tariffs on top of that is not really a very clever thing. The only way in which the situation can be rescued is by massive massive cuts in government spending. And I don't think anybody's going to get a mandate to do that. So, we're in this final hole, really.
Yeah, wow.
Yeah.
Okay, look, got another question. It seems about every 100 years we have a change of power so far as countries holding, let's call it reserve currency status. I mean, at the moment it's the United States. I read it that it really started for them about 1918, end of World War I, when they were paid for goods and services to Great Britain and ended up with about 19,000 tonne of gold. So that's where it really started for them. But, you can go back 600 years ago, and it started with the Portuguese, and then it went through the Spanish and the Dutch and French, and then it went through to the British and now the United States of America. About 100 years seems to be as far as they can take it. So, and we end up with a currency that ends up with 98% of its value loss when measured against gold, real money, of course. So America's around 100 years now, so it's pretty much time, you would think, to change over the baton, and I don't think that anyone will be surprised when that happens. But China, everyone talks about China, a growth economy. It's breathing down the neck for America's neck for a monetary change. I'm just not sure whether or not China, Russia, would like to take over the mantle. I mean, I'd like your thoughts on this. Everyone thinks, well, they're going to take over the mantle. They'll have it for maybe 100 years until they mess it up. But do you think at this stage that they'd be keen to take on that role? Your thought?
It's a difficult one to answer. I think there's one fallacy behind this idea of 100 years. And that is that it's really what you're looking at is the rise and decline of empires rather than currency. Because until Bretton Woods, basically currencies, international currencies were backed by gold to a greater or lesser degree. So really, this is, with the Americans' dollar, this is the first time you've had a currency lasting for decades without any anchor in terms of value on an international basis. Okay, so this is very, very different. I think that from China's point of view, it makes no sense at all to take on that mantle. In other words, the next fiat currency, if you like, which the world uses. I mean, I don't know what their thinking is, but I would, if I was asked by the Chinese what my view is, I would say, put it on a proper gold standard. Then it really doesn't matter, because the future of your currency in terms of how it's used and all the rest of it will come and go with your influence around the world, not with the management of your currency, which is really where America has gone horribly wrong. And this is why I think China has accumulated a lot more gold in secret than publicly declared as reserves on the People's Bank's balance sheet. They've been doing this since 1983, when legislation was put in place for the People's Bank of China to operate in markets, acquiring gold and silver on behalf of the nation, the state, the Communist Party, whatever. And ever since then, they stepped up their mining output and rapidly became the world's number one gold miner by output. Stepped up the refining, which they kept very much under state control, and banned effectively any exports of gold. So it's all been accumulating. I mean, I say it's sort of China's Hotel California for gold. You go in, but you can't get out. Yeah. And that's basically what happens. It's the only sort of small window in there is Hong Kong. And that is, it allows visitors from the mainland to go into Hong Kong, buy gold, jewelry, small ingots, whatever, and carry them over the border. And they're just allowed to do that. And it allows them to evade any sales tax on gold jewelry. So that's about the only loophole in it. But again, you see, it's all about getting the gold into China. They've even advertised for their citizens, go and buy gold, it's good for you, or whatever the byline is. So they do understand that gold is money and the rest is credit. The Russians understand this as well. And I think the only reason that they haven't started putting their currencies onto gold standards is they don't want to be blamed for bringing down the rest of the world, which is essentially what would happen if they did that. I mean, just imagine what would happen to the faith and credit in the US dollar, in the euro and all. I mean, the euro could put itself on a gold standard because some of the major countries actually do have substantial reserves. But they wouldn't be able to do the other thing, and that is contain the spending, because you can't go on a gold standard without containing government spending. I mean, where the Americans went wrong, if you like, leading up to the collapse of the Bretton Woods system, was, that gold sort of meant that prices did not rise that much in the post-war years. But the expense of that in terms of growth of GDP, because the growth in GDP, it multiplied something like 6 times over that period. The growth in GDP basically meant that the other side of the price stability was the gold reserves were running out. You can't inflate your credit without an effect on prices. Now, if the prices are anchored to gold, then what happens is the gold disappears. It's actually as simple as that. And that's basically what America did. So you must contain spending. And the other thing you must do is to encourage saving, which means changing your tax policy for savers. And you must also discourage borrowing for consumption. Now, the banks would do that in a sound money environment because at the moment, they know that, you can sort of lend money to someone to buy a house, whatever. You know that prices are rising and they're going to continue to rise. You may not quite understand why, but you feel secure in terms of your collateral. Now, when that security suddenly starts going in a sound money environment, then bankers will become a lot more cautious about lending money to people to effectively spend beyond their means.
Yes.
I mean, it's back to the Macauberism, isn't it? Income 20 shillings, expenditure 19 and 6, happiness. Income 19 and 6, expenditure 20 shillings, misery. I mean, that was written by Dickens. I think it was something like the 1840s, by which time there'd been about 20 odd years or 25 years of post-Napoleonic gold standard. Gold standard in England came in about, I think it was 1822 or something like that, but sovereigns were already in circulation. So, we have to change our behavior for this. Yeah. And the Chinese do have this problem, but they are in a position to deal with it. And I think also the Russians in particular, I mean, they would benefit hugely from going on to a gold standard because think what happens to the interest rates. At the moment, the Bank of Russia's deposit rate is something like 18%. So, that would climb down under a sound money regime. The reason it's up there actually is really quite simple, and that is nobody wants to hold rubles. I mean, they are the enemy. They've been sanctioned and all the rest of it. And, if you buy rubles, you'll be thrown in jail and have the keys thrown away. There is no trust in the ruble. But, this is a wartime thing. But if they actually put it on a proper gold exchange standard, in other words, you could exchange your rubles for gold at any one moment, then those interest rates would fall, and they would eventually fall to somewhere around about 3%, maybe even less percent. And on that basis, I mean, the economy would then benefit hugely.
Yeah.
Because just think, if you can expand bank credit to finance production, not finance consumption, finance production, then you have got an industrial revolution. And this is actually, I think, the ambition for China and Russia, for the whole of Asia, and also the expanding BRICS membership.
God.
Sounds right. Oh, look, before I give you another question, let's make a statement here. I mean, I was born in 1954, so 70 years old this month. But I remember growing up as a kid, going to school. My father started his own business, engineering business, and one wage. Mum stayed home to look after the children, cooking the meals, making sure everybody was fed at the end of the day and was clothed and whatever. And we weren't short of anything. I mean, my father never was no millionaire or no wealthy person, right? But we were never short. No. We had medical bills were paid, no problem whatsoever. And this between that and I turned 16 in 1970 or 17 in 1971 when we went off the gold standard. That's when all the problems started. After 1971, and I listen to these economists out there, and they're talking about, be careful about what you wish for. Gold's going to go rise. Should be rising up. We think is bullion. Bullion should be rising, but in fiat currency, don't get me wrong here. Fiat currency will be rising. And these basic economists saying, don't be careful of what you wish for. Well, I would like the wish for to be that everybody gets a full bite of the cherry, and that means going back to a gold standard where everything is equal. And you don't have a Department of Agriculture, you don't have a Department of Water Supply, you don't have a Department of Immigration, you don't have a Department of this and that and everything else, where you got all these public servants. Now, okay, you as a public servant, you might work hard, but the bottom line, you'll be given jobs of employment under a gold standard because the country would be booming, absolutely booming. So. That's how I think we're being educated by these economists out there to think that, gold standard, you got no growth. That's a lot of hogwash, ladies and gentlemen. It's just a lot of hogwash. Question, and it's a little bit based on what I've just said. So it has been said that the United States is increasing its government debt by $1 trillion every 100 days, right? The debt at the moment is government debt is 35.26 trillion. And so by these calculations, the debt will be over 36.3 trillion by Christmas this year. Alasdair, what effect will this have on the gold price? And we'll talk fiat currency gold price at the moment. What effect will this extra $1 trillion every 100 days have an effect on the price of gold or the value of gold?
Yeah. Well, the value of the gold broadly remains the same. It's the value of the paper currency which is declining. And I think that's the important thing.
Yeah.
Having said that, when you get a flood of people going out of the paper currency into gold, then the value of gold in terms of its purchasing power, measured against particularly commodities, for example, that will tend to rise. So pure supply and demand. And I think, this is something which I don't think has been fully appreciated in bullion markets. If you look at China, household savings run at around about 35% of GDP. That's $6 trillion. $6 trillion every year, no longer going into property, not really attracted into the stock market. It's just going into deposits on banks' balance sheets. Now, banks also, by law in China, have to, or regulation probably rather than law, have to offer gold accounts. This comes back to the whole of the gold thing. The Chinese government are preparing their population for this. And these gold accounts, basically, if you've got 500 yuan, maybe 600 yuan, you can open a gold account. So less than $100 equivalent, you open a gold account, and that account is denominated in gold. It's basically an unallocated account as I see it, but what it does is it leaves the liability with the bank with a gold liability. So what does it do? It has to go out and buy gold in the market in order to have it. The idea that you can back these customer accounts with paper gold, is actually severely limited. And this is what's now happening. This is the drain of gold coming out of our markets is actually increasing. I mean, one of the things I monitor is the withdrawals from COMEX. And every day, pretty much, there's significant withdrawals coming out of COMEX. And we're talking about, not small quantities. Over a month, it can be 250 tons, for example. And then there is the other side, which you can't immediately see, the exchange for physical. Now, what an exchange for physical is, it's an exchange of a COMEX contract for a London forward. So why would you exchange a COMEX contract for a London forward? Well, the answer is that you sell your COMEX contract, you buy your London forward position, and then you take delivery. So here again, you can see how gold is sort of running out of the system. It's going to lead to a situation where gold's value in its own right, and I'm not talking about measuring it in dollars or euros or anything, gold's value in its own right looks set to rise. And that is going to accelerate the dollar crisis, in my view. Already, and I think I made this point on your show before, and that is that as far as the Bank of China is concerned, they're not in there buying gold; they're getting rid of dollars. Yeah. I mean, they know these guys aren't idiots. They can see what's going on. They can see that America is in a debt trap. They can see exactly what's happening. So they just want to basically get rid of dollars, and they've not only been selling dollars for gold, but also for copper. They've been stockpiling other things as well, other commodities, and even grains. I think wheat they've been stockpiling, according to reports. They're also cutting off supplies in critical minerals. Their exports of rare earth materials and all the rest of it. Why would they do that? Well, they don't want dollars for it.
Yeah.
This is the point. This is the point which nobody actually understands, because they don't understand the difference between money and credit. If you're getting out of credit, then you don't want to take credit in payment for commodity exports. Instead, what everybody's saying is, oh, they're hanging on to this because they want to deprive us of the gallium arsenide or whatever whatever it is. They've also been accumulating silver. Silver is so desperately important to their technologies. That's definitely been accumulating, but they've been doing that for some considerable time. And on top of that, of course, we've now got other countries accumulating silver. India, they're getting into the solar panel. Solar panel manufacturing, and what's required? Silver. And then, of course, you've got, an interesting one. Samsung, the Japanese, no, it's Korean, I think, company, has come up with a new solid-state battery, which is far heavier in terms of silver, and it replaces lithium. I mean, something like 1 kilogram of silver replaces something, I don't know, like, 50, 60 kilograms of lithium. It effectively makes lithium redundant. Mm-hmm. Now, the Chinese are, they're not going to sit there and just watch the Koreans lead the technology. I mean, they'll be copying it really pretty damn quickly. Mm-hmm. So, okay, there are problems with that because the very fast charging and all the rest of it requires far more robust infrastructure for charging these vehicles. But you can see which way this is going. So there's every reason really why the Chinese are getting rid of dollars for real things. I mean, we're talking about real commodities.
Yes, it's a very interesting thing about it, silver. I was reading, I think I got it from your Substack stories, that a kilo of silver goes into these batteries for the motor cars, and you can see how many motor cars, electric motor cars, that China's knocking.
It's a lot of silver.
It's a lot of silver. Yeah, exactly. On this subject, and I did read this article on your Substack channel, and Darryl and I are going to be doing another story on this with a group of people next week. But your story was about getting out of credit, right? For some time now, Alasdair, you have been saying get out of credit and hold real money. I want you to elaborate on that just a little bit more.
Yeah. Well, people don't understand credit. I mean, the way Keynes put it, and I think he was repeating something that Lenin or someone had said, people don't understand money. Well, that is very, very true. And then, of course, it allows us, going back to Darryl's point about, central banks got something rather nasty and surprise for us. It allows central banks to do these things without anybody understanding what the hell's going on. Yep. So understand the difference between money and credit. That's the starting point. Money, by law, internationally, since the Roman 12 tables, going back to 450 BC, I think, or 540 BC, basically, money has been metallic. That has been accepted. And the reason that it's stuck in law is because it actually accords with people's use of money. They've sort of got to the point where they rejected other things, whether it's cowrie shells or tanned hides or whatever it might be. They've rejected that in favor of metal. And the basic metals which have evolved out of this are gold, silver, and copper. In fact, in our lifetime, we've had copper coins. But that's now gone. That's now gone. We've got aluminium ones or something, or nickel ones. Anyway, so that is the whole point about money. That is, there's no counterparty risk to it. It's accepted not just in Australia, but everywhere. It's even accepted by the Chinese. And I'm told that when, sort of special forces like the SAS or Navy SEALs are parachuted into some godforsaken place in the middle of Asia, the one thing they will have is gold and silver coins, because that is accepted locally. If they want to sort of, they've got to pay their way anywhere. So that's, that's still the case everywhere. Absolutely everywhere. I mean, the Incas accepted the value of gold when, the Spaniards went over there and discovered this new world with all the gold and silver and all the rest of it. Suddenly, Spain got terribly rich because it stole all the gold and silver of the unsuspecting Incas and Aztecs. So that is money. The rest is credit. Now, people get confused on this. Currency is credit. Why? Because there is counterparty risk. There is a debt on the other side of the currency. The debt is on the central bank's balance sheet. You look at the central bank's balance sheet, you'll see under the column of liabilities, currency in issue or currency in circulation. The bank credit, we know bank deposits. I think most people, sort of watching this show, have got the point that you don't actually own your bank deposit. It is an obligation of the bank to pay you the value of that deposit. Now, the fact that when you take that deposit out and you move it into another bank or whatever, is immaterial. It still remains credit. Look at equities. People think, well, if I own shares, that's not credit. No, that's wrong. Because what you're buying into is an obligation for the management of the company to accumulate income and to pay you a dividend stream. If that's, it's either pay the dividend stream or accumulate it on your behalf on the company's books. That is an obligation of the management to its shareholders. That is credit. And then you've got this thing which was illustrated in a book by a chap called Ward, The Great Taking, which I don't know if you've seen that, but he explained that with the dematerialization of stock, basically people like Euroclear, not people, but businesses like Euroclear or the DTC in America, they actually own the shares in a company. In other words, they have the benefit of the obligation from the company, and they issue an entitlement to that. So you have got your distance from the company even more. Now, why is that? The fact that someone like Euroclear actually owns the stock means that in the event of a crisis where collateral is required in order to save the banking system, they can use that collateral because you don't own the shares. It's no longer your property. The obligation is no longer your property. You have the, your counterparty in terms of this credit is actually Euroclear. So they can take those shares and do what they bloody well want with them, which of course is what would happen in a crisis. So everything is credit. Money almost never circulates now. I mean, the idea that you go out and you spend gold coins or silver coins, you don't do it. You just don't do it. I mean, you used to spend silver coins, yes, because that that was change, if you like, in your pocket. But there's no silver in any coinage anymore.
No, yeah.
And so everything you do is credit. I mean, you might have a workman. I mean, I've got a guy, a very good workman, who's painting the house outside at the moment. Now, I pay him after he has done the work. Now, he is taking it on trust that I will pay him. I have an obligation to pay him, and he has the credit of that obligation. It's the other side, credit debt, as it were. I have a debt to him to pay him for his work, everything. When you have children, you educate them, you finance their education. You might send them to a fee-paying school. Now, you send them to a fee-paying school, what you're doing is you're entering into an obligation to your child to pay the fees for as long as he's going to be educated in that school. That, again, is credit. It's the child has the credit. You have the obligation. Absolutely everything we do, even if you buy something, let's just say, without actually paying for it immediately, there is an element of credit. It is credit until it is settled. The whole world revolves on credit. The point about the difference between money and credit is it is money that secures the value of credit. But when you do not have that link, then the value of that credit can go anywhere. I mean, it can even collapse. And that's the situation we have. Because what backs the credit? Well, in the case of the dollar, it's the full faith and credit in the US government. Yeah, no. So just think about that for a moment.
I have thought about it. It's 36.3 trillion in debt.
Exactly. And it looks like they could have great difficulty continuing to finance their profligacy. I mean, I've actually put out a Substack article this morning, which you won't have seen yet, I guess, but I outline the debt trap that the US government is in. It is horrendous, and it's going to take down the whole world. I think, we've discussed about, how the central banks are, massively in debt themselves, with their equity wiped out completely many times over in most cases. We got the banking system, which is over leveraged. I mean, look at America, for example, collapse of collateral on property, commercial real estate loans and all the rest of it, wiping out about half their equity, so we're told. And then they've got huge bond losses. And I mean, the whole system is in danger of falling apart. Rising interest rates will mean that zombie companies suddenly have got to go bust. I mean, we've got one here, Thames Water, which is hitting the headlines now. They're going to run out of money. And this assumes that the regulator doesn't fine them for sewage spills and all the rest of it, which the regulator is doing. And they're going to run out of money by May next year. It bust. why should something which is a utility with a guaranteed income, a monopoly in the areas where it operates, why should that go bust? Well, the answer was that it was acquired by a private equity business that leveraged up guaranteed income, guaranteed by a regulator, incidentally. And now, of course, with rising interest rates, they can't refinance it. So, the whole system is now, it's really falling apart. But I think the one thing that's really going to make it collapse quite clearly is the debt trap that the US dollar has got into. Foreigners have been buying debt. I mean, some of this is from, say, the captive insurance, the US captive insurance industry in the Caymans, for example. They will buy it because insurance companies need to have a profile, if you like, of maturity against their liabilities. So you've also got a lot of purchases of US government debt from centres like London or Luxembourg and so on. But the two big players, Japan and China, are now net sellers. And so who's going to replace them? I mean, this is something, and it's going to be a spreading problem, because as people wake up to this debt trap scenario, which at the moment they're oblivious to, then you're going to find that even domestic US institutions won't touch US government debt. They will be net sellers.
Yeah.
Then what level of interest rates does the Fed have to raise the sort of coupons on debt to in order to unlock the logjam? That is going to be a very interesting question. When it happened over here in this country in 1976, it took interest rates up to 15.5%. Well, interest rates were a little lower than that, but we had three medium-term government debt issues of 15%, 15.25%, and 15.5% coupons. Now, that was with the IMF rescuing the country. So what happens when you have a currency where there is no rescue of it? The IMF can't rescue America, for goodness sake. Apart from anything else, the IMF is a creature of the Americans. So, I mean, okay, they can print obligations, but I mean, the one way in which you guarantee that the faith and credit in the US government's in the dollar is really going to go down the pan is to print. I mean, it's all matched by obligations, but I mean, what we would be talking about is the Fed going into massive quantitative easing in order to cover the government's books. It just collapses the dollar, and this is why, if you look at the trade-weighted index, people are even getting out of the dollar to go into the euro, go into the yen, go into sterling, and presumably going into the Aussie too. So, this is not a good thing.
Right. Brilliant. Well, before Darryl finishes off, I just want to make one statement, and Darryl and I have made the statement before, and I think you'll like what we do over here, Alasdair, is that we lost faith in cash in the bank a long time ago, and Darryl and I consider that, pretty well at least 80% of our net worth is in bullion. It's in gold and silver. And it's a physical. You can touch it. We don't open up the safe every day and look at it, whatever. We just know it's there. And the bottom line is that nobody, unless we tell somebody where it is, nobody knows where it is, right? So it's very, very safe. But a lot of people, or a lot of economists or financial people would say, oh, too much gold and silver, or too much in one thing. But when you say too much in one thing, if you've got a lot of currency in the bank, that is too much of one thing. You don't have currency in the bank, right? But now, after what you're saying, whether you have stocks and shares, whether you have land, whether you have paintings, whether you have whatever, there's always an obligation. There's always a third party, an obligation. So to our audience here tonight, or here, it is tonight here, I would suggest that the only cash you have in the bank would be to pay your bills on a quarterly basis or 6-month basis, top it up when you have to, but get out of the bank currency, right? Put it into gold and silver bullion, because that means there is no third-party risk. So what you said tonight makes so much sense, Alasdair.
Mm.
Absolutely. I mean, I've sort of come up with this mantra: get out of credit.
Yeah.
Of course,
exactly.
and hopefully people will begin to understand actually that credit is ubiquitous. It is everywhere. And I mean, there are other things you can get into. You might think that you could get into property, but the problem with property is that how do you buy and sell it? Well, I mean, the answer is it's bought and sold on credit. So, this is a real problem. I think, however, that mining shares, even though that is, there's a credit because there's the obligation, as I said, of the management to look after your interests in a company. I think that there is probably a good story in mining shares because they are so undervalued compared with where they have been in the past. With the gold price, the silver price, and various other commodities. I mean, it's just completely neglected. I did an interesting podcast, which will be released very recently, with Eric Sprott, and he was talking about some of the stocks in Canada, which he is involved with. And I mean, it's clear from what Eric was saying that some of these stocks are just so undervalued. And he's looking at gold in the ground. And he's talking about stocks where gold in the ground is valued at $10 an ounce.
Undervalued.
The problem for anyone in this is being able to understand, what is genuine and what isn't genuine, and understanding, the geology and so on and so forth. So there's a huge learning curve for anyone, but with a lack of research facilities, research directed at the mining sector, that I think is going to really change. And of course, the eventual guarantee of this, if I'm right, and our credit system actually collapses, the guarantee of this, I think, is the Russian and Chinese and Asian axis, who have very, very clear plans to bring about an industrial revolution throughout Asia and throughout the BRICS countries. So that, I think, means that there is life after death as far as we're concerned. But in other words, that there will continue to be demand for these very, very important materials. So, the transfer of power in all this is, of course, another factor. And I think this is something which really does worry the Americans.
Yeah. I will say, and I'll finish with this, is that I will reiterate that when I say we are so much into bullion, we call our bullion cash, right? It's actually better than cash because it's not paper, it is metal, right? If Darryl and I think there's a better opportunity somewhere or a good opportunity somewhere that enhances our lifestyle and whatever, we will sell some of our gold or silver to buy that identity. So it's not a matter of hoarding, it's a matter of looking. Get your money, get your currency out of the bank and wait until you see a good option to buy and use your gold and silver to do that.
Well, as Peter Daniels would always say, save in gold.
Yeah.
And so you can always liquidate any portion of that you like to purchase something that at the point of time is important to you.
Yeah, there's always somebody that will buy your gold.
Absolutely.
Never had no to gold. No.
Well, as we draw to a close, and it's been a wonderful night again. I mean,
so much information.
Absolutely. I mean, and I'll refer to Charlie Jones again in just a moment, but the people you meet and the books you read, how important is this? Look, we have an event coming up, and you would be aware of this, of course, Alasdair, because you're going to be participating, of course, coming to Australia and joining us over there. It'll just be a fantastic event. I would say it'll be the biggest event in this industry ever held in Australia with the quality of the speakers that we have. So What I thought we'd do tonight is just share exactly what's going to happen. We're calling it Countdown to Collapse, Unleashing the Next Economic Financial Storm. And we have 5 speakers. Brian and myself, of course, will be there. Alasdair Macleod. Everyone knows Alasdair. We've got Lynette Zhang, of course, and we've got another great speaker by the name of Pat Mesiti. The important thing here is that this event, we've started selling tickets only a couple of weeks ago, and we've got a lot of people who aren't very happy with us at the moment because we've just about sold out of the VIP tickets. We had 100 up front. This is a special offer where those who are the VIPs, and it's a cost of $399. What are they going to get for that? Because the price is going to go up to $499 within the next 30 days. So for those who get in first, they're going to save a bunch of money and they're going to have an experience like no other. So after the day event, where they'll be supplied lunch and all of that, and listen to all the speakers, after that, 200 people will come back into the room and they will rub shoulders with our speakers, with all the speakers. So they'll be able to get up close and personal, ask direct questions over a glass of champagne, some hors d'oeuvres. It's just going to be a wonderful environment. But you know, it reminds me so much of when we spoke with Peter Daniels. You'll remember this occasion, Brian. We spoke with Peter Daniels and we said, how do you get to meet these people? How do you get to meet someone of the quality of an Alasdair Macleod or a Lynette Zhang or a Pat Mesiti? And what Peter suggested to us to do was he said, you make sure you're the last man standing. You make sure that if you go to an event, you just don't go to the event and listen to them. You walk up to them and you communicate with them and you develop a relationship. And in the process, if you do it right, you're going to learn a lot more over that night and over the coming years than you could have ever imagined. And I remember the night we took advantage of that. We did many times. So I remember the night with Jim Rickards.
Absolutely.
And we waited till no one else was in the room except for Jim and his daughter. We approached Jim and our plan was to connect, talk with him, develop a relationship, invite him back to Australia. And that's exactly what happened in 2016. Jim, for us, he's an icon in the industry, and we have learned so much from him from having personal contact with him. Now, the people who come along to this event and get in early and save $100 in the process will have that opportunity to be in direct contact with all the speakers. I mean, you got to, honestly, there isn't a better opportunity to advance your career than to take advantage of this opportunity.
Absolutely, and I can do one better than what even you're saying, Darryl, because when we had Jim Rickards over here, right at the end, it was about 11:30 at night, remember? And Jim has obviously had plenty to talk about, but at 11:30 at night, he's looking for a cab to get home or get back to the hotel. Well, I know you tapped me on the shoulder, and said, Brian, would you like to take Jim back to the hotel? Which I did. Now, guess what I did in that half an hour of getting back to the hotel? We tin-wagged and we had a great conversation. He was sitting right next to me. This is Jim Rickards. It's like having Alasdair Macleod right next to you. And you're asking questions, getting feedback and all these sorts of things. So you develop that relationship you would never, ever get.
Yep.
Just look, it's great listening to Alasdair on YouTube, on the TV screen. It's great listening to Lynette Zhang. But what happens is, you finish your article. It's on an hour or a half an hour, and you think to yourself, "Oh, I would have loved to ask Alasdair this question." And it's always a question that you've got that you haven't heard of before. That's what's going to happen when you come to this seminar. You'll rub shoulders with Alasdair. You'll rub shoulders with Lynette. You'll also rub shoulders with 400 other people, and they're all like-minded people.
That's it.
You're going to get so much out of this you never get from a TV screen. So at the end of the day, you've really got to think about and get in early and buy these tickets.
And then you add to that Pat Mesiti. Pat Mesiti has been somebody I have looked up to. He's been a mentor for many, many years. He's spoken all around the world in front of tens of thousands of people. He's a personal development expert. If you listen to Pat Mesiti, you will grow and you'll develop and you'll become a much better person in the process. He is the maestro. So you've got 3 fabulous speakers that all offer something. And by the way, Pat is very much into gold, of course, and will be a strong recommendation. But you've got these 3 fabulous speakers and Brian and myself, and you go, wow, I mean, this is a night not to be missed. Australia has never done this before, that we've had speakers of this calibre at one event all at the same time.
People you meet, the books you read.
People you meet and the books you read. It is your opportunity, our viewing audience, to take advantage of this as of immediately. So you can book by going to our website, As Good As Gold Australia's website, asgoodasgoldoz.com.au, and in the top right there, this will appear at the top of the page, and as an RSVP opportunities void, just click on the button and it'll take you to Eventbrite, and you can commit to purchase your ticket and take advantage of this fabulous opportunity.
Yeah, and look, and if you live in Victoria, New South Wales, Queensland, I'm sure you've got a day where you can take off annual leave. If you have to leave on the Friday, leave on the Friday.
Well, Brian and I did when we went to see Jim Rickard.
We have always done that. All of our conventions have been in Sydney, Melbourne, Brisbane, everywhere but Adelaide.
Everywhere but Adelaide.
So,
absolutely.
You know, please do really think about it hard. Take that annual leave day off, because you will go away from this seminar knowing that, boy, I'm glad I came.
Yeah. So there it is. We'd look forward to seeing you at the event, and particularly yourself, Alasdair. I mean, how do you feel about this coming to Australia?
Well, I'm very much looking forward to it. And, as to your point about actually meeting people and so on, from my point of view, I do enjoy meeting, communicating, if you like, with my audience, on an individual basis or small group basis, because the feedback from my point of view is equally valuable, because I get a better idea of people's concerns, and therefore how I can respond with my Substack in terms of addressing those concerns and writing articles which answer them. So, I'm very much looking forward to it, as well as visiting your beautiful country.
Thank you.
That's Saturday, 30th of November at the Intercontinental Hotel in Adelaide. It will be tremendous. Thank you once again, Alasdair. Really appreciate your time, your energy, your input into supporting this channel. You've been a fantastic contact for As Good As Gold Australia and a great friend, and we really appreciate that. We also would like to thank our viewers and subscribers for their continual support of this channel. We really do appreciate it. And I can only say, until next time, let's all stay well, let's stay motivated, and
goodbye for now.
Goodbye for now.
Goodbye for now.